All right, perfect. So, so we are going to talk about infinite banking. I'm going to bring on my partner, Mondo Grimes, and then after we're done talking about how to establish your insurance policy as your number one asset for your trust, then we will do some Q&A based off of the information that that we learned today. So I'm going to go ahead and hand it over to Mondo. Hi, Mondo. How are you?
Hey, Christina, how are you? Good evening.
Good,
Hello.
good, good. Yep, you have the floor. Thank you so much for being here.
All right. Thank you for having me. All right, everyone. Good evening. I was going to say good morning, but it's been a long day. Good evening, everyone. Hope everyone is well. I'm going to share my screen and we're going to dive right into infinite banking and what it is. Okay. Actually, Christina, can you host disabled participant screen sharing? So if you can allow me to share, please.
You should be good to go.
Okay, perfect. All right, awesome. There we go. All right, let me know, Christina, when you can see my screen.
Yep, it looks great.
All right, perfect. Okay, infinite banking, being your own banker. I am Mondo Grimes. I'm the executive director and president of AMG and Associates, and we specialize in infinite banking, insurance policies, IUL, and permanent whole life policy. So with all that said, let's dive right into what is infinite banking. All right. Infinite banking is a personal finance strategy. It leverages a permanent life insurance policy as a personal bank. I know most of you have probably seen this concept all over social media and different places, have heard about it. Today, I'm going to give you a very basic view of what infinite banking is and what an IUL is, okay? So we're going to start very basic tonight. Here's some benefits of why people practice infinite banking. Number one, the insurance industry is the safest industry to invest in, period. And we're going to give you some examples why in a little bit, and who else invests in insurance. It has uninterrupted compounding growth. We like those words a lot. Yields 5 to 6 more times than a long-term CD. And guaranteed returns. Now, I know you may see that and say, okay, how does that work? Well, we'll show you in a little bit. But these types of policies, IULs, have guaranteed returns. I'll show you how it plays out. There are more benefits in infinite banking. You have access to your money anytime, without penalty and without tax and with tax-free withdrawals. So this is a tax-free policy. It allows you to retire 100% income tax-free. Okay. There's no reporting to the IRS. Okay. There are codes built into by the IRS that allow an IUL to operate tax-free. It's protected and it protects you against lawsuits, inflation, recessions, and judgments in most states. But there's more. With infinite banking, we teach you how it works, how you leverage an IUL to do your own banking. There's no credit check or financial statement requirements for loans. Okay. So when you're in your own bank, you are your own bank. You wouldn't have to fill out a financial statement or go do a credit check on yourself when you're the bank yourself. Okay. There's no repayment terms required. You are not required to pay back the loan. Okay. There's no collateral needed for a loan because the death benefit is the collateral. Okay. And as I mentioned, it's easily accessible in liquid cash. Okay, liquid, we'll show you shortly. Now, why am I just hearing about infinite banking? Okay, a couple of reasons. It's extremely tight marketing regulations and advertising restrictions for insurance companies. Here's the deal, you can understand why. The IRS and the government does not want many people knowing about these policies for a few reasons. Number one is because they're tax-free, okay? And there's a lot of restrictions. That's why you see on social media, not social media, TV, and a lot of different web advertising, not social media. You can see term policies and all different types of insurance, but there's a lot of restrictions on promoting and advertising IULs because they're tax-free and the government doesn't play a part in the benefit. Now, here's how it plays out. Okay, real simple. Now, a lot of you last week, you saw this in Christina's presentation, but we're going to go a little deeper into it. Okay. All right, you're sitting at your desk and you have your paycheck, okay? A lot of us, typically, we're conditioned just to put it right into our bank, okay, or leave it where it was. What we're saying is that every dollar you make, this is the reprogramming. Skip the bank. Put it into your life insurance policy first. Pay you first. Pay you first. Not your mortgage, not your bills, not the groceries, not any of that. Pay you first. Okay. And there's a reason for that. Because you want to credit your bank, your cash value, so you can get the uninterrupted growth. And what you can do 2 days later or a day later, contact the company, fill out a very simple form, electronic or paper, either way. Your name, policy number. You want to take a loan out from the company, not out of your money. And that's how it works. When you take a loan out, it's not from your money, it's from the company, from the insurance company. Okay. So you say you put 10,000 in your cash account, say it's your savings, right? Call it a savings account. Then you take a loan from the company. Your cash is still in that account. You take that loan, you pay your bills, you do all that. So you basically turn every dollar into two. Okay, you've got $1 in your cash account, and you've got $1 that you've taken a loan out and you've used it for whatever you need to use it for, and you're not obligated to pay it back. Why? Because the collateral is the death benefit. So 10,000, so you pass, will be deducted from your death benefit, but not from your cash value. Okay, and over and over and over again. And I'll show you an illustration shortly. But here's some benefits of why you put it in there as well. Accumulated cash value, uninterrupted compounding growth, as you can see here. Tax-free cash value. You can leverage it for many different things. Income. You can set up at a certain age. We can structure your deal where you will draw an annual salary out of your policy. Okay, well, your policy will pay you $100,000, $150,000, $200,000 a year, whatever you choose, and how we can structure it for you. You can use it as income replacement. Let's say you've got a good amount of cash value in your policy, and let's say that you are laid off or you're in between jobs or whatever it may be. And you're like, man, I need to bridge the gap here. Well, you can actually go to the bank of you and have income replacement from your cash value in your policy. Okay. And also private banking. You can use the cash value in your policy to actually lend to others. Okay. So let's say you're a parent and like me, and I have soon to be two 16-year-olds, and the young ladies are looking for a vehicle. Well, we don't have to go to Capital One or Chase or whatever institution and ask for a loan. I can actually teach my girls how we can use our own cash value to withdraw the money out of take a loan from the company, from our insurance company, out of using our cash value and our death benefit as collateral to pay for the car cash. We take a loan from ourselves. Okay. You can lend to others if you want. It's a lot of different options, so many different areas of flexibility here. And then, of course, there's the death benefit. There's the death benefit, there's living benefits for different reasons. Say, for instance, you have chronic, terminal, critical illness. The company will allow you to cash out a portion, usually around 50 to 60% of the death benefit for different expenses you may have. Okay. Now, one misconception though, I want to talk about this because it's important. A lot of people think life insurance is all about, when you die. Well, we forget that life insurance is about using it during your life. Christina, this may seem kind of funny, but I heard this illustration recently where it was compared to baking soda. If you ask people, what do they use baking soda for? Everyone says everything in the world. I clean with it. I do this, but no one says baking. Right? No one ever uses it for baking. They use it for other things. And that's kind of how life insurance is positioned, where people don't think, well, wait, I'm supposed to use it for my death. Well, no, it's actually designed for you to use it during your life. Hence life insurance. Okay. So, there's a couple policy examples here I want to show you, help you see in the live illustration of what it looks like. All right. This individual is Sally Sue Smith, a fictitious character here, a young female, little baby, 2 years old. And what's beautiful about the policies is that you can actually take a policy out on yourself pending underwriting requirements are met, or on a loved one, spouse, a child, grandchild, even, and a 2-year-old here. Okay. And so the trust is taking out a policy on Sally Sue. The trust is the payor, the trust is the owner of the policy, and the trust is the beneficiary. Okay. Now you as a trustee, you are the one controlling the trust, right? So the trust is paying into this policy you see here at $6,000 a year, $500 a month, okay, on Sally Sue. If you go over here in this green section, there's 2 columns I really want you to focus on. Number 1, here's the death benefit, starting out at $987,000 and increasing for 10 years, landing at a little over $1 million. But over here is where the cash value is listed. Now, this is an example of just purchasing a policy like this and just setting it and forgetting it. You're not doing infinite banking yet. This is just how it naturally flows on its own without you even messing with it. Okay. So you can see here, the cash value is building. Okay. And what we want to do is we want to get as much as your 6,000 into your cash value and less going into paying for the cost of insurance. And there, without getting too in the weeds, there's an IRS code that we have to abide by to make sure that there is a cost of insurance. Okay. So you do have to pay for a little bit. But we don't make sure most of your payment is going to your cash value. Okay. And as you can see in this illustration, it's 6.54%, which you're not going to find any in savings accounts or a lot of other accounts that will yield this tax-free. Okay. And you can see over time, in 10 years, we're not paying anymore, but the policy keeps growing. Okay. Now, let's say on this example, you're the trustee and you're putting in your paycheck. Let's say you make $60,000 a year. Okay. Paying yourself first, every check you receive, you put it into your cash value. A day or so later, you take a loan from the company right here. This company is F&G, this illustration. Okay. You take a loan from them, but guess what's still sitting here? The 4,000 plus the money you just put in. Okay. And it's catching all this interest. Every time you get paid, you pump it into this column. So I'm just use your imagination for a second. Take what you make a year and add that each year to these numbers. Okay. I'll give you another illustration here. This is Mike Smith. He's 30 years old, male, obviously. 12,000 a year, paying $1,000 a month. Okay. Death benefit is over here, starting at 596, going up to 720. And you see here, his cash value is growing at this level right here. And it keeps going after 10 years and going and going. Now, this is not even with infinite banking. So let's say, Mike is a young professional. He's making, 75,000, 80,000 a year. Well, an additional 80,000 a year is going in here, and any other, money he gets, whether it be a gift, whether it be, a return or whatever he gets, he's putting all that in here to catch this return right here. Now he's like, oh man, you know what? Something happened. I need some extra money. I got to help my mom. I got to do this. I got to do that. Well, real easy. You just take the form from F&G or whatever carrier that we provide for you. You fill out the loan paperwork. They'll do an ETF transfer or whatever amount up to what you have in your cash value, and you receive those funds the next day. Okay. One more example. This is a different example where Joy Wallace, she's 32 years old, and we want to front load this policy. So she has some liquid cash available. She's got 150,000. She's going to pump that in the first year, annual payment. Just start with that. And then each month after that, or year, I'm sorry, for the next 9 years, she's going to be 24,000. So you look at the death benefit, she's sitting around 6 million up to 6.9. And we see how the cash value is growing. Now, this is not doing infinite banking, but she makes 100,000 a year. So what she's going to do is put an additional 100 in each year, catching all of this interest. Okay. And whether she says, hey, you know what, I really want to put a down payment on a piece of real estate. How much is it? It's 50 grand, whatever. She can go see, she's got more than that obviously in there. So she can contact the company, fill out the form, take a loan out. Next day, she gets $50,000. Well, but this hasn't been deducted $50,000. It's still in there. It doesn't affect this at all. And one more example. This is Michelle Jones, 46 years old. I put her as a smoker, 75,000 up front and 14,400 for the next 9 years. And you can see here how her policy is growing. Okay, and cash value, just letting it go, just letting it ride. Okay. Now, again, you know, whatever she makes, she's just pumping here and pumping here. And this is what's great about it. It puts you in control. It puts you in control of your money, and you're getting credited a crazy amount of interest, and it's tax-free. I have an example right here of what paying yourself. I'll zoom in on this one first, on this side. I want to show you something. So you look on this plan, someone's front loading it for $50,000. Lisa Johnson up here, front loading $50,000 and putting $1,000 in a month for the next 19 years. Now you see her cash value is growing. Okay, she's going to put her whole entire paycheck in here every year. Okay, and it's growing. But then later on in life, she's like, you know what? I'm going to retire at 40 because she's actually, how old is she? She is. This is the child. This is your grandchild, 1 year old. It's a baby. So at 40 years old, this child can now start taking out annual withdrawals as a salary of $200,000 a year. Look at the cash value that's been accumulating over her life. And this is without infinite banking. This is just getting it and setting it and forgetting it, not even touching it, just making your annual premiums for those first 20 years, and that's it. Okay. This is powerful. This tool right here, a lot of people set up plans to where they set up an additional supplemental, retirement plan for themselves, 100,000, 150, whatever the policy, how we design it, whatever allows us to do to make sure you have additional income that you're paying yourself in retirement years, which is phenomenal. Okay. So there's a lot of different ways. Not everyone does this. There are a lot of people who do. It all depends on your needs and what your goals are regarding the IUL policy and how you want to operate in infinite banking. Okay. All right. One more slide. Well, he uses a strategy. Okay. Banks do not put their money in CDs. Matter of fact, banks do not keep their money in their own banks. They don't even keep our money that we put in there in the bank. If banks did that, they will go broke and out of business like that. What they do is they put our money and their money in permanent whole life policies, just like what I showed you. That's where they put all their money because it's the safest place to put it. Okay. One of my friends, Eric, is a equity funds manager, and he said that 62% of equity fund managers have zero stake in their own funds, but they have an enormous amount of cash value insurance. Ray Kroc, McDonald's, Walt Disney, John McCain, he funded his entire presidential campaign against Obama through his IUL cash value policies. JCPenney, let's see, real estate investors, Citibank, Wells Fargo, BofA, Chase, and the like. Okay, this is an extremely powerful tool that people have been leveraging for years. The Rockefellers, okay, you name it, Carnegie's. Now here's our team. It's me in the middle. Top left, we have a very talented group of individuals who will help you in a lot of different areas of finance, insurance, and other wealth management services. On the left here, we've got Bob Shigley. He's a wealth management specialist of 35 years in the business. Next is my partner, Executive Vice President of AMG and Associates, Jonathan Shaw. We also have a brother, Charles Frazier, tax attorney, Esquire. He is a phenomenal individual. He worked for the IRS for 12 years before he became a practicing attorney. So he knows the code and what the IRS is doing. He knows he was one of the officers. So he's very familiar with their practices and what their requirements are and how to negotiate with them when necessary. So right here was AJ Lavender, our VP of marketing. He helps a lot of small businesses who are looking to increase revenue and learn how to scale their business and marketing. Bottom left, Eric Howard, one of our partners in the insurance side and insurance department. He's the CEO of First Generation Life out of North Carolina. And then on to the bottom right, we have Rich Birchill, CPA, wealth management, and tax specialist. These guys are phenomenal. And we do help many people get their affairs in order in many different aspects, okay? Now, what I'm gonna do, stop sharing my screen here, and this is what I would like to share with you. I know it's part of the homework here, and as far as what Christina has walked everyone through this entire week, I want to make sure that we complete everything to the T, and I'm sure that's what Christina wants for you as well. All right, so what I'm going to do right now, Christina, is I'm going to share in the comments a link, let me get it here, for you to click on and schedule your consultation with us, so we can start getting one of your first assets in IUL, doing infinite banking, being your own bank, get that started as soon as possible. So I'm going to copy and paste this in the chat. Here we go. There we are. Okay. So during Q&A, I would love for everyone to click on this, look at the available times, book your time. And when you do so, as we're discussing and answering questions, go ahead and post in the chat the time you selected and the day you selected. That way we know we got everyone go ahead and getting this thing taken care of so we can get it moving for you. This is a very powerful tool. I couldn't state it I mean, any stronger than that, man. I mean, Christina, you know, this is a game changer for people. It really is. And you look at generational wealth and what you're doing for you and your family, when you have these types of policies in your trust and the beneficiary is the trust, not only is the trust making money with assets while everyone's living, but when we do expire, the trust is making money again, keeping it going for generations to come. Okay. So, you know, Christine, I don't know about you when you were growing up, but I used to hear that term trust fund babies, right? And it kind of had a negative bent to it because you just didn't know, you know, whatever. But I'm looking for my generation to come to be some trust fund babies. So,
yes, me too. Me too.
So that's what we're making here. So definitely hit that link, set your appointment up, and then put that time in the chat. Awesome, Jessica, great job. Also, August 21st, 10 a.m. Perfect, good stuff.
Yes. Jessica's a go-getter. All right, Jessica, love to see it. Love to see it. We got a bunch of go-getters on here, and we know that they do have questions. So we are going to dive right into Q&A, but I do want to elaborate on what Mondo was talking about, right? Your insurance policy, specifically your IUL, it needs to be your number one investment, right? I know you like real estate. I know you like crypto. I know you like stocks and bonds, but your number one investment needs to be your insurance policy, needs to be your own bank, needs to be a tax-free tool that you're using to leverage compound interest, right? It is so powerful. So if you were to ask me, you know, how do I get rich or how do I build wealth? You know, I would tell you there's two tools that you need. Those two tools are, one, a trust, and two, an insurance policy. Yep. Without those two things, you're not going to be building wealth efficiently, effectively, or in a position to where it's going to last generations. It'll probably last one generation and that's it. Your family's back to poverty, and you don't want that. So you need both of these tools because it's going to protect the wealth and it's going to preserve the wealth, right? Yes. That's what the insurance policy is for. One is to grow the wealth, but it's also to preserve it, right? So that it can last generations, right? Mondo showed us a policy of, you know, of these little babies, right? You can put a policy on, you know, a 30-day old, right? So you want to be able to do that. You want to put those stipulations in place to where your trust is taking out a policy on every single beneficiary that is born. So if your kids have a baby tomorrow, in 30 days, that baby is getting a policy.
Yep.
That is what we are doing here. We are changing the trajectory of our family. We are changing the trajectory of our kids' kids. We are breaking generational curses. We are done with that. We are done with being misinformed and not being empowered and having the proper tools in place or knowing the proper formula in order to build wealth. We know now. We know that we need a trust, and we're trustees now. We already set up our trust. Monday, Tuesday, and Wednesday, we did it. We're done. So you need to go get your trust notarized. Once your trust is notarized, go get a bank account. Once you have a bank account, please book a call with Mondo so that you can get your insurance policy. I know a lot of you guys are sometimes thinking about like the financial commitment of it. So one, Mondo's not going to ask you for any money up front. Two, your insurance policy is customized, right? So it's customized based off of you, your funds, how much you want to put, right? You can create a policy as, you know, as little as like $100 a month if that's what you wanted.
Yeah.
But like Mondo said, he just showed us the formula of how we can be a private bank. So why are we putting our money in Wells Fargo, Chase, Citibank, TD Bank, all these banks, making them richer, and we're not funding our own bank. We're not putting ourselves first.
They're taking our money.
Yeah, I am tired of us getting the leftovers.
Yeah, I hear that.
Like when I was a nurse, I was working 7 days, like a beast. 7 days because of nursing shortage. You hear the crisis, you hear it all, right? And when I would see my paycheck, like my jaw would drop just to see how much federal taxes was taken, just to see how much went to Social Security and Medicare. And I'm like, wait a minute, I just did 80 hours in a week, not in 2 weeks, in 1 week. The more hours I'm doing, the more money they're taking from me. So instead of us letting us sit in a checking account, we need to pay ourselves first. We need to put it in our policy. Just park it there. Park it there, take it back out, and then you pay your bills. But this is the right way of doing it. We're showing you the formula, the blueprint. This is like the yellow brick road. So the process, because today's Friday, guys, like we're done. Like you have already set up your 3 trust. So now you need to take action. You need to follow through. That's why we're holding you accountable. That's why I keep telling you every single day, join the Facebook group. I want to hold you accountable. Let me know what your progress is. Let me know that you notarize your trust. Let me know what day you're going to notarize your trust, right? If we work Monday through Friday, well, guess what? Our trust is getting notarized Saturday morning. And then by next week, we'll have a bank account and we'll be on the phone with Mondo getting our first asset if we don't have any assets. I've talked to some of you guys. There's no assets yet. Well, guess what? You have established the owner, and now it's time to get your first asset. Your insurance policy is a liquid asset. It has liquidity. It's tax-free. It's an asset. You can leverage it. So you have the owner, which is the trust, and now you're going to establish the asset. Okay, so I'm here to hold you accountable. My assistant is here to hold you accountable. The entire team is here to hold you accountable. Mondo is in the Facebook group. He's going to be looking out for your post so that we can hold you accountable. All right, because action takers are money makers. Okay, and we want you to take action. We want you to take action right away. We want you to be intentional. So with that being said, I want to, Elaine says she booked hers for August 25th at 12. Congratulations, Great Elaine. Job. Yeah, I had a couple of conversations with Elaine. So she is an action taker. I know what she's all about. So Danielle said August 17th at 12. Congrats, Danielle. Awesome. All right, perfect. Awesome. Perfect. So we are going to open up the floor for Q&A. Okay, so I'm here, Mondo's here. Whatever questions that you have about insurance, let's go. Whatever questions you have about transferring your assets, we applied for our EIN for our private family trust today. We also learned how to transfer our assets for a house, car, businesses. So let's get these questions rolling because I do want to be respectful of your time. It is Friday night. So let me see, Danielle said, what age is too late to start? So I'm assuming you're talking about starting a policy. Is that correct, Danielle? Do you want to come off mute?
Yes. Say for instance, I don't want to give my age, but if you're over 50, is it too late to start? As far as as far as your IUL policy, if you're over 50, is it too late to start?
No, it is not. No. And that's the thing. What's the power about this is whether if you're older and you're concerned about that, don't be concerned about that. What the stipulations are more about your health than your age. Okay. But the insurer, that's the beautiful thing about this whole system. The insurer doesn't have to be you.
Okay.
It could be your healthy granddaughter.
Oh, okay.
You see what I'm saying? So it could be, as I saw you, the 1-year-old. I'm helping a family today, earlier today, on a 5-year-old.
Gotcha. Okay.
So yeah, so don't stress too much about that. The bigger question is that when you talk to us in the consultation, we'll find out, is it the best option for you to be the insured, or do we need to find someone in your lineage to be the insured?
Perfect.
Okay.
Thank you.
You're welcome. I see another question here. Will it still work for at age 46? If you're 46, absolutely. Same answer there. Yeah, don't worry about that. I'm 46, so come on now, make me feel old here. Excellent.
That was me. I have another question that I asked below that too, if I can just chime in. I have a son. He's 10 months old, but I mean, what are the requirements for that? Because one of the things I had worked with Dion with a little bit is I'm trying not to put them in the slave system, but I have a feeling with life insurance, you're going to have some sort of birth certificate or social security number.
Yeah, social security number. I know one family is very similar to your situation, sir. So the birth certificate wasn't required. It was passport was sufficient. If you had that, you just need some sort of identification on the child. So if the child has a social, fine. If not, birth certificate, fine. If not that, passport, have to have something,
Okay.
So
that's what we're working on right now is the passport.
Yeah.
Hopefully we can get through that without having to provide all the other stuff.
Absolutely. Okay, great.
Thanks.
Great, fantastic. And again, it's funny, the age, what age is too late to start? Okay, all right, gotcha. So any other questions? I do want to share this though while you guys are coming up with questions. So understand that what Christina said, a policy like this, being your own bank, will actually allow you to leverage it to get into other arenas of investing, to leverage other assets, real estate, crypto, whatever. Okay. This is a powerful tool to get you into the game. Because think about it. If you want a piece of real estate right now, you didn't know us at all. Guess what you're going to do? Go to a bank. To do what? Get a loan. What if that bank is you? See what I'm saying? So it's just changing who is the bank. It's the same process. Like you're just borrowing it from you versus borrowing it from the bank. All right. Let's see. This is a Christina question.
Yeah, so Danielle says, for the amendment I got lost, can you tell me what an amendment do I fill out? So that amendment is for if you have an LLC or an S corporation. Do you have a business, Danielle?
Yes. Where I got lost at is when I went to the Secretary of State in Texas. It had like amendment for the registered agent, amendment for the articles, and the ones I was looking at, it wasn't really looking like yours. So that's why I got confused.
Yeah, it's for the amendment of the articles.
Articles, okay.
Yeah, it's for the amendment of the articles. And so you can pull that up and then you can go either watch the replay of this one, even though it's not, the identical form, it's right. similar questions. And there's also a video training on the online portal. So
Okay.
you can go ahead and log in there, and then you'll be able to follow that video as well. But it's pretty much self-explanatory. You do have to put, like, whatever information that they're asking for. So if they need the ID number of the entity, if they need the effective date, and then primarily they want to know, who are you removing? So who's the authorized representative, and you remove them, and then you add the new authorized representative, which is your business trust
Okay.
that we had set up on Monday. Okay.
Thank you. And I have a question for Mondo.
Yes.
Yes, ma'am.
For the, say for instance, we have several insurance policies. We have whole life as well as term. Can we transfer those?
Not the term. Go ahead. Finish your question. Go ahead. I'm sorry.
No. You're answering what I want you to answer. Go ahead.
Okay. Not the term. Now, if you do have cash value in your whole life policy, that is a conversation we're gonna have regarding transferring the cash value into a new policy. That's a conversation that we can have. It's not always the smartest thing to do, but we need to look at the particulars, and we'll decide and let you know what we advise.
Now, those term life policies, we bought those like way in the beginning when we didn't know anything. What can we do with those? Can we turn them into permanent, or do we just leave them?
It depends on the usually no, but it depends on the contract. Usually no. And understand that term life is not bad. It has a different purpose. Okay. It's like insurance. You have, and probably, insurance on your phone, and you have insurance in your car. It's all insurance, but they have two different purposes. Term and IULs are the same. It's that there's insurance, but it's just two different purposes.
Right.
So yeah, so I wouldn't recommend you. I mean, you obviously got the term for a reason, and we can talk with you about why those, why you got it, and keep that in place. Yeah. So we can help you figure that out. Okay.
All right. We'll talk. We'll talk on our consultation.
Okay. Sounds good.
Thank you. Thank you.
You're welcome. Yeah, absolutely.
All right. Do we have any other questions? You can come off of mute and ask any questions that you have, or you can put them in the chat. Any questions on anything that we have gone over?
I have a
Yes.
Oh, go ahead. Go ahead. I'll wait.
Oh, I have a question. This is Elaine. I already have a business trust also. So the same way that we do the quick deed would also be the same way I would do the business trust for the trust, family trust.
The quick claim deed is to deed over property from your personal name to the entity. So are you saying like you want to deed over property to the business trust? Is that what you're saying?
Yes.
Yeah, so you would do it for whatever trust you've decided. So if you want to do it for the business trust or for the private family or the ministry trust, you can put your property in any one of those trusts.
Okay, so as far as the ministry trust is concerned, do the ministry needs their own trust? Not my personal trust.
No, the ministry trust, the ministry is a trust.
Okay. I mean, because I guess I'm getting a little confused. Okay, we are pastors, and we want to go ahead and continue with the 508C, and then we that's all we need, right?
Yeah, so we had set up the 508C1A. We had set it up on Wednesday. So that is a trust. The 508C1A is a trust that is designated as a 508C1A.
So I don't need so we just stop using the 503C?
So is it a 503 or is it a 501C3?
That's a 501C, yeah.
Okay, so that is a nonprofit tax exempt entity already. So my question to you is, do you want to dissolve that entity, or do you want to continue to use it?
Dissolve it. I want to use the 5.
Okay, yeah, so you can do that, because the difference between a 501 and a 508 is that the 501, you have to maintain the status of it. So you applied for the 501. So do you have 501 status, or you're just a nonprofit?
Just a nonprofit.
Okay, so you were never awarded by the IRS tax.
Oh yeah, we have an EIN,
No, that's not my question.
the tax
So-
ID.
No, that's not my question. So were you ever awarded tax exemption status by the IRS?
I think we did.
So that's a lengthy application process, and there's a lot of paperwork involved, and it takes about 2 years to get approved.
Yeah.
Okay, so with that, you have to maintain that status. So one, they can take it away from you. Two, you have restrictions as far as freedom of speech.
Right.
And then three, you have to submit your documents. So you have to submit your records and your meeting minutes. So if you don't want to continue to operate that entity, then you can dissolve it, and then you can just operate your 508.
I don't have to report to
You
the
can-
IRS.
No, you can just dissolve it.
Okay.
So yeah, you can let the IRS know. So you have to dissolve it through the Secretary of State, and then you can contact the IRS to let them know that you dissolved the entity.
Okay.
Yeah.
I have a question, but for the infinite banking.
Yeah, absolutely.
I have several insurance policy on about 7 of my grants. And I was inquiring the other day with the insurance company about getting funds, and they told me that only loan that I could get is through my cash value. And then first of all, they said they didn't know anything about infinite banking. And then I'm like, are you sure? And then the agent that was speaking to me decided to tell me, said, well, they know about it, but they don't operate in it.
Okay.
So do I continue? Well, I got a 2-year-old, I got a 5-year-old, a 6-year-old, a 9-year-old, 12-year-old. I got 7 of my grants.
Okay.
And so do I continue to keep that whole life policy with them? And
That's a conversation we'll handle on the consultation.
okay.
That's personal. But I would tell you that infinite banking is a strategy. Okay. It's not a policy. It's on how to leverage a permanent life policy. It's a strategy. So just because someone may sell it and provide it doesn't mean they know how to use the strategy within it. So there are people who, agents that can sell an IUL policy, but they're not really informed on the strategy of infinite banking, because it's a strategy, okay, and how to leverage the policy. So I hope that makes sense, right? Infinite banking isn't a policy. It's a strategy on how to leverage a whole life policy.
So, he said to me that they do operate in infinite banking, but because I no longer have a policy with them, but I still have policy on my grandchildren, I would have to come back and get a policy with them to be able to do anything with infinite banking with the rest of the people that I have,
Gotcha.
with them.
Yeah, I don't know. I can't speak directly to that because I haven't seen the contracts itself. However, I can help you sift through those details if you have the policies, and when we do our consultation, I can walk through it with you. I don't mind doing that.
Okay. All right.
Okay.
Thank you.
You're welcome.
I have a couple of questions. I wasn't able to get in on the first half of the meeting, but just real quick, I had just on unincorporated business trust, a question I had was, and this is just from some of the other stuff that I've read, can a blood relative be the grantor?
Yes.
So that there's no issue with that when you're setting up your unincorporated business trust.
No, there's no issue. So a blood relative can be the grantor, and then the grantor can also be an entity. So whichever one you prefer. But if you think about it, traditionally, grantors are related to the people that they're setting up trust for.
Okay. The other question I had was, if you sell your business to the holding trust, so now your holding trust is the primary officer, if you will, and holder of the certificates, right? Would you transfer any of would you leave the business as is then at that point, or would you transfer any assets or property from the business into the holding company or into the holding trust?
So I would leave the company intact the way that it is. And if you feel like you want extra protection for whatever assets that you possess, if it's heavy machinery, if it's vehicles, or if it's property, then what you can do is you can transfer it into the trust. And then the trust would then lease that asset or property to the operating business. So you can do both. You
All
can
right.
do
Then you have
both.
to set up a contract with the lease back to the business, right? From the holding company.
Correct. Yeah. So you would deed the property. Let's just say it's a commercial, building. You would deed the property over from the corporation to the trust. And now the holding trust is the owner of that commercial unit. And now that commercial, now the holding company is going to do a commercial lease with the operating business.
Okay. And if you have a loan with the bank, like when I did a business loan with the bank, but they have me as a surety and my individually, and then the corporation. If you deed it over to the holding company, then I am still the surety unless I pay off the property, right? I'm still tied to that property like that. And so I guess a question I had maybe for Mondo is if you're able to pay off that loan, I mean, would it benefit to have some sort of a life insurance policy, put it in there and then loan it and pay it off through that? I don't know if I'm making any sense there, but
I think it's okay. Yeah, say that last part one more time.
well, let's say you have $100,000 loan, let's just say business loan, and you have you can pay it off. Would it make any sense to set up one of these life insurance policies first? You know what I mean? And then take a loan from the policy to pay off as opposed to just paying it off with personal funds.
Yeah, it would. Yeah, 100%. Absolutely.
And I think well, I'm not gonna make any assumptions, but I have sort of the same question as that lady. When I've had several financial advisors try and sell me life insurance, and I never really did it but one of the things that I was, had the impression of was that you can only borrow what you have in there on the, what you've actually put in, and you can only borrow against it. But that's something I guess I need to go down the route with you on to get more.
Well, yeah, I mean, so for instance, like if you have $100,000 in there in your cash value, you can't take a loan out for 200 grand. Okay. So, so there is, yeah, I mean, you can't, say I'm gonna pay $100 a month and then I'm going to take out $1 million tomorrow. Like, yeah, exactly.
But I mean, just general rule of thumb, you can't loan out more than you put in.
Correct. Like for instance, let's say you go to your bank right now and you put $100,000 in your checking or your savings account. Okay. If you go to the banker, you put it in, you go right to the door next door and say, "Hey, I would love a loan for $100 grand." They will say, "Absolutely." You know why?
Because you got it.
There you go. If you put in 100 and you go to the same guy next door and say, "Hey, I want 500 grand." What is he going to say?
Right. Okay. So in this case, though, you had said something, I think, Christina said something previously, what if you don't pay it back? You have to pay it back, right? I mean,
no, you don't. No, because your collateral, for instance, if you don't pay it back, which a lot of in infinite banking, most people don't, it's deducted from your death benefit when you pass away. That's the collateral. Okay.
So the biggest thing is you'd have to stay you'd have to make sure that your policy stays in good standing. Otherwise, you would have to pay it back. Right? You have to make sure your premiums are paid through your policy contract.
Yeah, because you'll end up surrendering the policy, right? And everything explodes. Right. So, if you want to play the game, you have to pay premiums to stay in the game. Okay. So, but in the game, you can leverage that cash value by putting money in, taking loans out, doing the whole infinite banking cycle, but it costs to play the game. What does that cost? Your monthly premiums, your annual premiums. Okay. And the scale of the level, like where you want to play the game, is dependent upon how you front load the policy, what you're paying annually, all that. It's the same rules. It's just at what scale do you want to play?
And if you ever do one of those and don't pay them, I mean, will they give you another loan after that?
Yeah, absolutely. 100%. Yeah. So if you had 100 grand in there, you take out 20 and don't pay it back. Could you take out another 20? Yes.
Oh, up to the 100 grand that you had.
Right. Exactly. Right. Exactly.
Okay. All right. That was my question. Thank you.
Absolutely.
I also had a question. Hello, good evening, good night, everyone. So, you mentioned earlier, Mondo, about your insurance policy is not based off of your age, it's based off of your
Age and health. But what I'm saying,
health.
age and health. But my point was, a lot of people ask, well, I'm too old, I'm this age. I'm like, not necessarily. You know what I mean? Yeah.
Mm-hmm. Because in my case, I'm 33, but however, I was in an accident, and so a lot of I'm kind of like banged up. But so does that mean that my insurance policy, my premiums would be higher than usual because of those injuries that I sustained?
Possibly. I'm not the underwriter, but here's what I'll tell you. So injuries is one thing, sickness is another.
Mm-hmm.
Okay. So again, I'm not a doctor and I'm not the underwriter, but we would have to look at what conditions do you have? Are there long-term medical effects, whether it be medications, treatments, or whatever? Did it cause something that's more of a ongoing, lifelong thing? All that kind of stuff, right? So it could rate you a little bit, meaning that your premiums might be a little higher. But here's the thing. You're not really doing infinite banking for the death benefit only. Okay. Like for instance, people get a term policy or other types of policies mainly for the end of life benefit. They want a certain level of benefit to pass on to their loved ones, to the trust or to the beneficiary, whatever. With this, what we're talking about, there's a death benefit for sure, but that's not all you're getting this for. If you get in a little bit rated, you're in the game and you're able to do infinite banking, no different than LeBron James will be able to.
Yeah, I get it. Mm-hmm.
You know what I mean? So you're in the game. Now your monthly premiums, but that's okay. You're in the game. So you can still do infinite banking, no different than anyone else. So
Okay.
now if there are any sort of conditions that would the underwriter say, we're not able to insure her, then we look at another option. We start looking at other individuals that can be insured by the trust. So it's not a brick wall. We just have to look at how we pivot and keep it ethical, keep it legal, and make sure everything is above board.
That makes sense. And then so a follow-up question is there any do they limit how much you can put in? Like say, for example, with a lawsuit, I want to put in everything I got from that lawsuit all in one shot. Are you able to do that, or are you like kind of limited each month?
No, there's a yes and a no to that. So the first answer is no, because we look at that dollar amount and we put a strategy together on how we distribute it, how we should construct the policy. Now, the other answer to no answer is, and this is really on me more than it is on you. So it's me and my staff more than you. Mm-hmm. We have to look at the funds you're wanting to invest in your policy and make sure that all the inputs are not hitting any sort of IRS boundaries. Okay. So depending on what you're looking at paying moving forward and what you're putting in the front, we have to make sure that we're not hitting certain things, which one of them is called the MEC, which I can educate you on a consultation what that is. So there's ways we have to build it and fund it properly, okay, and make sure that it's built for the long haul, leveraging all the cash you want to leverage. That way you can get every dollar in there. So there's a yes, but we have to build it the right way to make sure everything is on point. You're not hitting any sort of limits. Okay.
Thank you for that. And then I have a question for you, Christina. Is there a way to get like the funds you receive from a settlement, like in a trust, as opposed to getting them to you. Does that make sense?
Yes, it does. So it depends on whoever is doing the disbursement. So typically when you get a settlement, it's through an attorney and they make you fill out like a W-9, just showing that they're going to give, 100,000 to, John Doe. And so you can choose who you want. And like I said, it depends on who you're dealing with. But if they allow you to choose how you get paid, then you can put your trust on that W-9 instead of your own personal name, and then they'll pay the trust.
Okay. Thank you both.
You're so welcome. Thank you. Thank you.
You're welcome.
Danielle has a question.
Yep, I got another one. I'm sorry. Before you explained everything wonderfully, I was taught by someone else that for your trusts were on top of your holding company. So this week we did the ministry trust, the family private trust, and the business trust. Now, when we constructed ours this week, we, as our holding company, we did that as our business trust. Did I say it right? Yeah, our business trust, we did it as our holding company. Is that correct structuring, or should we have because I know the holding company doesn't do anything. So should we have a holding company, and then we have the business trust, the family trust, and the ministry trust?
That's a good question. So it's optional, right? So what is going to happen is you have the business trust, right? And the business trust, you can either choose it to operate it as a business trust, or you could choose it to operate it as a holding company. It can be either or, right? So it can't be both, because a holding company doesn't operate. So you have to choose how you want to operate it, okay? So some people, they don't have a business, and so they will create the business trust and operate as a business. Some people, they already have LLCs and S corporations, but they don't have a holding company. So then they would choose to create the business trust, and they would treat it like a holding company, because that's what it is, right? So typically, the way that people are structured and the way that I am structured is I have 3 LLCs. Those LLCs are owned by a holding company. The holding company is an S corporation. The S corporation is owned by a business trust. So that's the way that I am structured. But you don't need to have an S corporation that is a holding company. Your business trust is a holding company. So instead of you creating a S corp or a C corp or another LLC, you can just treat your business as the business trust as a holding company. And so then you would not operate it, and it would own the other LLCs. Does that make sense?
Okay, let me explain a different way then. Okay, so my business, my current LLC, I can have the business trust own that, and the business trust still be the holding company?
Yeah, so it is. So whatever entity that owns the other entity, as long as you're not operating that entity, it is a holding company. So if you choose for that holding company to be an LLC, a S corp, a C corp, or a trust, it's a holding company. So there's no specific entity that it has to be, right? A holding company can be an LLC, or it could be a corporation, or it could be a trust.
But if the holding company doesn't do anything, like when we did the Dun and Bradstreet, and we talked about funding, will that cause a problem with it being a holding company?
No, it doesn't cause a problem. So there's a difference between the holding company being active and used, for and like managed, versus the holding company being in operation. So when you are operating, I'm sorry.
like a cash flow company. Is that what we're saying?
Correct. Yeah, that's operation, right? So you have employees, you have a product or a service that you're offering, that's operation. So your business trust is not going to do that. It's not going to have a product or a service or employees, but it can build business credit, it can own assets, and it can also accept cash flow and move cash flow around and file taxes. It's still an active company, it's just not operating in that sense.
Gotcha. You explained it well. Thank you so much.
You're so welcome, Miss Danielle. Do I have any other questions? Let me see. So Dennis asked, what is the purpose of a 1035 exchange?
Yep. So this goes to what one of the someone asked us earlier as far as their other insurance policy. So 1035 exchange is looking at either a whole life policy or an annuity, or even some sort of long-term care product. And to say you want a new IUL or a new policy, new plan, to exchange the assets within that old policy over to the new one, that is a 1035 exchange. You can do that transfer tax-free. It's within IRS code. So that's the purpose of it. Hope that answers your question, but it's just a legal way, tax-free way to transfer assets from one product to another.
Thank you very much.
You're welcome.
So Mondo, you have another question. This one is on YouTube. It says, what are the 3 top IUL insurance companies? You mentioned them in a previous meeting.
Oh, yeah. So what I would my preferred, let's say it that way. My preferred are National Life Group, F&G, Fidelity and Guarantee Life Insurance Company, and also North American. Those are my preferred 3. Now, there's reasons for that. You know, there's so many companies, there's over 1,000 companies actually that provide IULs. But what I like these 3 companies for a variety of different reasons: underwriting reasons, their customer service, the quality of their product regarding the products that we provide to our clients. We're doing IULs and being your own bank. I find that these 3 have phenomenal product offerings to make sure that you're getting the bang for your buck. And I also love, number one, look, you can get a great product, but if you don't have great customer service, it's not a good day for anyone. And so insurance companies, these 3 insurance companies have phenomenal customer service and how they treat my clients and how they treat me. Very simple process, very easy to understand for the client. So those are the 3 that I go with.
That's perfect. That's perfect. All right. Do we have any other questions while you have me and Mondo here? Any other questions? We do want to be respectful of your time. It's 9:22. Do we have any other questions about infinite banking, about setting up your trust, things like that? All right, perfect. So what I want to do now is I want to allow some people to say a few words, right? We are at the end of the workshop. So we just went for 5 days, guys. We went for 5 days and we set up our business trust, our private family trust, and our ministry trust. We also applied for our EINs. We did our board meetings. We did our business profile to establish business credit. We became ordained ministers on Wednesday, and then we transferred our assets today. So we have done a lot in a 5-day span, which is, you know, it can be overwhelming, but I am going to encourage you to continue on this journey of being a trustee. So I would love some feedback if some people can come off of mute, and if you can come on camera, that would be an absolute blessing to let us know how your experience was during the Wealthy Trustee workshop. So do you have any feedback or any words or any testimonies that you would like to share with us? Because we are constantly evolving as a company. We want to improve our user experience. And so we would love to hear from you guys, the people who have just gone through the workshop. You know, what do you think about what you've learned in the last 5 days? And would you recommend it to anybody? So I will allow, some people to come off mute. We got Elaine, we got Frank, we got Jessica, we have Danielle, we have Andres, we have Dennis.
Excuse my appearance. Hi, everybody. It was an amazing week for me. I've learned a lot. I'm excited about getting everything implemented, and you did a phenomenal job.
Thank you so much. Thank you, thank you, thank you so much. I really appreciate you, Miss Danielle. I appreciate you being here. I appreciate you being, hands-on with the information, asking good questions, being attentive. So, we definitely need to stay in contact, whatever it is that you need. I'm here to hold you accountable. So I need you to know that you are not by yourself. So just because the workshop is done doesn't mean that the work is done. Okay. So we have to actually, take action, get those trusts notarized, get our assets in order, get our assets transferred over. And so I am here as a resource for you. Whatever questions you have my contact information, my email. We're on the Facebook community together. So whatever it is that you need, I'm your resource, I'm your guide. So I appreciate you. Thank you so much, Ms. Danielle.
I appreciate you. Thank you so much.
Thank you. Do I have, thank you. So do I have any other takers? I got Andres, I got Dennis, Elaine, Frank, Jessica, and let's see, Jessica. Okay, Jessica's coming through. Hold on, let me add you on the pin. Wait, hold on one second. There we go. All right, Jessica.
Hello, everyone. Christina, you have been a blessing to me. I'm so grateful for you and all of this information that you have given to me. These workshops have been extremely informative. I look forward to, telling some of my peers who are also interested and looking for this kind of information, because you don't really find this online. Like, I would literally on Instagram one day, I came across your page. You were very responsive. This just has been really great for me. I'm super excited. I'm a little nervous, to be honest. It's a little nerve-wracking to get into these contracts with these trusts, only because it's new information to me. However, some information on the challenges you may jump into, like going into the notaries and them denying you or asking you for some of your your actual trust, and how to approach that kind of situation would be helpful, because I'm just so nervous to do it. Also, I'm still a little stuck on who the grantor should be and whatnot, but I appreciate you being willing to still offer yourself to us throughout the process. I love the Facebook group and holding us accountable. I think it's great to have other people that you can talk to on their journey, and I'm really looking forward to breaking generational curses that have been placed and building some new ones, and unlearning some of these financial habits that we've been taught, like to save your money and put it in your bank account and all of that. And so it's a lot of information for 5 days. However, I appreciate the chance to go back and look at the videos, the recordings, and that way do it at my pace too. But other than that, Christina, you're such a blessing to me and my family. I thank you. I look forward to you working with 7 Ways to Health. And Mondo, thank you also for the opportunity to learn about the life insurance. I'm super excited to even jumpstart that. And so just stay blessed, both of you, and thank you so much.
Thank you so much, Jessica. Thank you. We appreciate you so much for those kind words. And yes, you're right. one, we need to stay in contact. We need to be a tight-knit community. We need to leverage the Facebook group. We also need to be a resource to one another, right? Jessica was talking about how, you know, if you go to a bank and they ask you for your documents and you get denied, you can put that experience in the Facebook group for your other peers to see it, and we can all troubleshoot together. So that is that's one thing about being a trustee, is that you don't have to be a trustee by yourself, right? You have a circle of trust, meaning you have people that are also trustees going down this journey with you, and we are working together, and you know, are like a village, right? A tight-knit community. So like I said to Danielle, I'm also telling you, Jessica, like I am a resource for you guys. So this is a marriage, okay? Like we are a unit. So it doesn't end here, even though, you know, you got in majority of the information, it doesn't end here. So we are going to stay in contact. You let me know what it is that you need. You have access to my calendar, so you can always text or call the community line, and then we can also jump on a call. So if you haven't already set up your trust, once you're ready to set up your trust, or at least have it halfway done or anything like that, please book a call. I would love to go over your documents before you get them notarized, and then just, you know, proceed with this journey like fearless. And another thing is that with this journey, because trust is not one of the most popular entities, you are going to have to be in that space where you're educating the person across from you. So you might have to educate the notary, right? I just had a client do that 2 days ago, right? The notary didn't know what they were notarizing. So it's like, you might have to educate the notary. You might have to educate the banker. You might have to educate the dealer at the dealership. You might have to do that because they've probably never heard of a trust, and they're like, you know, with their eyes all crisscross, like what is this? The only thing that I know about is a corporation. So it's like, you do have to inform them, but that is okay because you are in the right arena. Believe it or not, you're in the right arena. I was actually just listening. I'm not listening, but I was reading an article about Tiger Woods. So I don't know if you know, but his estate was in a lawsuit. He had a girlfriend for a couple years. She lived in the house. The house is owned by an irrevocable trust. She tried to sue. So that she could stay in the house, and she lost the lawsuit. Why? Because she's going against the irrevocable trust. So you are putting yourself in the right position to where you are dealing in this type of space to where you are so you're dealing in this type of space where you are protecting your wealth, your assets, your family, you know, your lineage, everything. So I commend everyone that's on this call. Thank you so much, everyone, for being here. So Andres, you have something to say? Let me remove Andres. Where are you? Let me see. Okay, perfect. Hold on. I'm going to pin you. Give me 1 second. Where is the pin? I gotta find, there it is. Okay, you're pinned. Hi, Andres, how are you?
Hi, this was a very informative workshop. I went down this route. I mean, I touched on it earlier, mainly because of my son, and then I found out about you, and I hopped on the opportunity right away because well, anyways, the path I'm going on, trust is the next step. I've been studying different versions of foreign trust, this trust, and I guess at the end of the day, for people that have been doing this for a while, it is tough to find someone that will actually walk you through this stuff, because trusts are very, very simple at their core and extremely complicated, and you can do anything with them. And so to actually walk through with any sort of a semblance of knowledge and follow through is a breath of fresh air. So just in that, but I'm gonna do it. I'm a little hesitant on my business stuff just because I've been doing it for 20 years, and it's that paradigm shift, and it takes me a while. I have to mentally like process it first and say, okay, I'm doing this. This is going to be the way I operate. But and again, this is just my take on things. I do not want my money in the banks. I want them out. I want them in something different. And so it's buy a piece of land or do this. And you know, I'm open. I think it's a good thing. So between the trust and the infinite banking, I think it's great. So thank you.
Thank you so much, Andres. I really, really, really appreciate those words. Thank you. And I understand the fear, and trust me, like fear will definitely hold you back, but you have to take this journey fearless. And you have to understand now that you're not operating as a regular person anymore. Now you're taking on this new persona as a trustee. So that comes with a whole new, set of rules and regulations and, a mindset shift. So I know that you are right now in that space where you're shifting your mind, you're open to new things, you're going to operate a new entity. So I'm super glad that you've decided to, one, take the workshop, two, actually implement what you are learning here. And like I said, I am a resource for you. So I know, I'm not sure if we have a call booked already or if you're intending on booking the call, but I am, ready to help you with this whole entire process. So we could definitely dive in a little bit more detailed about your structure, your business, and we can do that, on a one-on-one so that you can give me more detail and I can, show you a different way of doing things. So thank you so much for being here, Andres. Thank you for those kind words. I hope that you're in the Facebook group. I think you are. And then we can just, stay in contact.
I will. Yeah, I appreciate it. Thank you. Thank you both.
Thank you. Do I have anybody else who would like to give us their feedback? Elaine, do you want to say a couple of things?
Yes. I'm sorry, but I'm ready for bed. I just want to thank you because I had a trust done last year and a business trust, and didn't have any idea what it was about. I keep asking questions or calling, and she wasn't available, and I spent a lot of money getting that trust and that family trust done. But nevertheless, I'm glad that I got involved with you. I got involved with you through my daughter. She gave me the website and everything, but she hasn't done anything yet. And so I said, well, I'm gonna go ahead and just get the information and then do what needs to be done. My concern was just getting that deed. The young lady that did the trust for me, she wouldn't do the quick deed for me. She told me go get a lawyer after I spent the 6 months of money. So I think I'm just thankful for all the information. It's very informative. It was a lot. And I know you remember when I text you and I says, could you slow down some? But I'm glad for also the video that's going to come in behind that so I can go back over it and then reiterate what I'm kind of missed during the session. So I will recommend you, and I will also try to get my daughters, I got 3 girls, to get involved because I have a daughter has a nonprofit organization. And so this has been very helpful. And then the infinite banking, I started to go take the classes, but for some reason I couldn't pass the test. I didn't take the test yet. I kept studying for it, but I didn't want to do that. I just wanted to do the infinite banking and put my money in. Okay. But since I have all this information, I'm going to go forward and move on. And I thank you. And I also want to thank the young man, what's the name, Mondo, for being able to accept the invitation for me to make an appointment so that I can get started in that area too.
Fantastic.
Thank you so much. Thank you so much, Miss Elaine. We appreciate you being here. We appreciate those kind words. And I'm so glad that you are an action taker. Like, it's a pleasure being able to communicate with you for these last few days. And I know that it is a lot. And I know that the most important thing for you is getting your assets transferred into the trust. So I would love if you were to book a call with me so that I can go over your quit claim deed before you actually submit it to the county, okay? I just want to make sure that everything on there is correct as far as your legal description and as far as where you've put, you know, the name of the trust and your name and stuff like that. So that would be an honor. So just let me know when you are ready to do that so that I could be that second set of eyes for you before you move forward and submit it with the county, okay? But we appreciate you being here and, you know, and being very engaged and asking good questions. And you just let me know if you have any questions, right? You can drop your questions in the Facebook group. You can also email me or you can text the community line. And I know that you've been texting the community line, so you know exactly how to do that. So that's great. But like I said, thank you so much, Miss Elaine. I appreciate you being here and engaged in the workshop. Do I have any other people that want to give their feedback on the workshop? I got Frank here. Frank, do you want to say anything? Let's see who else. Dennis, would you like to say anything? And also, did everybody book a call with Mondo to, you know, to make sure that they do follow up and actually create that asset that is a non-negotiable? It's like you have to. That's one of the ways to building wealth efficiently and effectively, by you paying yourself first and by you having your own bank, right? Even Andres, he mentioned it. He's like, I don't want my money in the bank. And that's how I am too. So I will tell you that 90% of my money is sitting in my policies. And then I have just 10% because I don't know what's going to happen with the banks, with the Fed now, with the currencies and all this stuff, right? I don't want to wake up one day and boom, you know, my money is just no longer available. Like the digital, you know how you see the numbers in digital and then it's like all zero and the bank is gone. I don't want that to happen to me. And so with, I don't know if you guys know this, but with insurance policies or insurance carriers, they have more strict rules than banks, right? So they have to have more funds in reserve. So they are a safer option for you to hold your money in rather a bank. And so that's why I have almost majority of all of my money just sitting in a policy, and then it's just so liquid. I can, you know, get the money within 24 hours directly into whatever account that I need. So I'm definitely with that. So if you haven't booked a call with Mondo, go ahead and book that call. Andres said that he wants to finish setting up his family trust. Okay, so that is that's also a good option too. So if you don't have any questions, then yeah, set up your trust and then get with Mondo so that you're able to take advantage of that meeting and actually start that application process to where the trust is going to take out the policies on you and your family members. Dennis said this has been a great mastermind. Thank you so much, Dennis. I appreciate those kind words, and let me know what assistance you need. Let me know what resources that you need moving forward, because I want to hold you accountable and make sure that you have set up all three of your trusts. You've gotten your bank accounts, you've done your board meetings, and if you're establishing credit, great. And if you're transferring assets, great. So I'm here to assist you guys through the whole process. This is the whole point of, you know, doing it with you, that I'm here guiding you through the process, holding your hand, being the resource that I need to be for you. And the main part is the accountability. So that's why I want you guys to book the call once you are done going through the replays and you're pretty much either have set up the trust or at least attempted to finish it, so that we can go through everything so you can get it legalized and in operation. So with that being said, there are two things that I have for you. One is I do have homework for you. So the homework is one, you can do a video testimonial on the information that you learned here. So if you didn't do one here live, then you can go ahead and post a video testimonial inside of the Facebook group, just letting us know what your experience was. And then two, go ahead and book the call with Mondo so that you guys are able, and I know some of you guys have, and some of you guys are waiting, so that you can, you can start getting set up with that number one asset. And then another thing I wanted to let you know is that we do have an affiliate program. So with the affiliate program, if you guys decide to introduce trust to any of your friends and family, and you recommend the Wealthy Trustee program, then you will receive a 20% commission. So I just dropped the link in the chat to our affiliate program, so you guys can go ahead and apply to be an affiliate, and then take advantage of that commission. It starts to add up after a while. And then I'm going to go ahead and put the Facebook group in the chat one more time if you don't have it. And then that is it for us. We are complete for this workshop. And it was, like I said, it was an absolute pleasure. And I'm waiting to hear back from you guys as far as how far you've gotten in the setup process or in the operation process. Okay. So I got the Facebook group in there, and I got the affiliate. And then Mondo, can you put the link one more time for those of us who are getting off the call and we need to snatch that link one more time?
Yes. And I do see that Elaine and Danielle said they booked. However, on our end, we do not see the appointment. I do see Jessica and Derek, I believe, but not Elaine and Danielle, just a FYI.
Okay, maybe they might have to do it again. I'm not sure if they're using the same device that they're on right now. So Mondo, he put
Derek and Danielle, we're the same.
Oh, Derek.
Oh, okay. Okay.
We're both.
Yeah, they're one unit. Yes.
There we
Right.
go. Okay. And then let's see, Elaine, possibly. Yeah, she said she booked, but we don't see it on our end yet. So just making sure that if she did a book, that she gets her spot. So
okay. Yeah, and then I'll go ahead and text her I'll text her the link too, because I know she's good with her phone. We've been texting back and forth. Okay. So
I just did it now. I just did it again.
Oh, you
okay,
did.
perfect.
Okay.
Directly to you.
All right, gotcha.
You see it?
Yeah, did you? Oh, okay. So you're picking your spot, but you didn't actually go through the link.
There's a link on it. You had a link on it.
Oh, that's why. Okay, that's why I didn't see it. You didn't go through the link. Okay, yeah. If you can click on the link I posted in the chat right above the posting I just made. If you can click that, you can select your time on our calendar. Okay.
Oh, okay. Okay.
All right. Perfect. Awesome.
All right, perfect. Yep. So so that is it for us. So thank you so much for being here for the last 5 days. We really appreciate you, and look forward to hearing from you soon. So let me know when you want to, book a follow-up so that we can get you going if you haven't, if you haven't been, with that momentum getting going yet. Okay. So everyone have a beautiful evening, a beautiful weekend, and look forward to hearing from you guys next week or very soon regarding your trust and regarding your infinite banking policies. Okay. All right. Bye.
Blessings to you all. Have a great weekend.
Y'all do